Vaidyanathan, who's CMD of Capital First, joins in as always to discuss their numbers. Good to have you on the show. Thanks very much for taking out the time. What led to the strong performance despite the Ind AS guidelines?
On Ind AS basis has gone up by 51% and profit after tax on the Indian GAAP basis has gone up by 59%. So on the bottom line front, all is good. The basis of this growth is simply the growth of the loan book and the operating leverage.
Right. Give us your own sense on how you see the future of the financing business in the wake that, we've had 2 consecutive rate hikes on offer. How does this change the landscape when you see the credit trends going forward from here?
Actually, we should split this from the corporate action that you see on most of the channels already, which is the large corporates and the small corporates. On the small corporates, we're actually finding demand is going very, very strong. And that is going to have a significant play. In fact, I saw the cement numbers up 11%. I saw the FMCG numbers up 11%. Today in Economic Times, I read about how the PMI has, capacity utilization has gone up to 75.2%, which is highest in 2 years. So really, at a capacity utilization of 75, moment to start touching 80 or 85, investment demand will come back. So the government expenditure on this, on revving up the economy, I think is really showing results. So our business and the financial services as such is heavily influenced by such growth in the economy. And I think seen from that prism, I think next 4 or 5 years is going to look very, very good.
Tell me about how the overall asset quality has been shaping up, both in the retail as well as the wholesale book.
Our asset quality has been very stable. For the last 8 years at a stretch, our gross NPA has been in the order of magnitude of about 1.7, 1.8%. Net has been about 1%. In fact, it's been coming down. I think that what's really happening is that with the greater availability of information through GST and through technology and the more banking habits that have happened in people, bureau records, for example, 2010 there were 150 million records on bureau. Today there are 600 million records on bureau. So the whole ecosystem has become much more credit friendly, I should say. It's reflecting our results. I can tell you guidance for viewers is that at Capital First we are experiencing no problems at all. We don't expect to see any issue in credit quality over the next few years. We are absolutely fine.
Of your new business is coming from existing customers, and the reason why I'm asking you this question is because when I speak to some of your peer companies, they are taking a lot of pride in saying that, look, we are now able to monetize the existing customer more. So we've acquired a customer and now we are giving him, instead of a mobile phone, we are giving him a sofa set and also an health insurance on EMI. So how much of your business is coming from existing database?
No, this is an important question because it directly affects productivity and profitability. In our case, of course, we focus on it. I would say that close to about 40% of our incremental volume, 40 to 45% comes from cross-sell. And I think that trend has substantially increased over the last few years.
Scale, what kind of margin benefits and NIMS expansion you are likely to see? Because just for the benefit of our viewers, if I can break that question further, if you are using better technology and better processes, I'm sure you will be able to sweat the asset more and milk the customer more, which will automatically lead to better return ratios.
Okay, first of all, we never use the term milking the customer. I think it's a very wrong term. The way we think about it is that definitely this shows up in sweating the assets more. So let me just break that down for you more specifically. We have actually seen our net interest margin come down over the last quarter, which was rather stable for a long time. And you might ask why. I think the increased interest cost that we are seeing in the system for the last year or so is beginning to show shown cost of funds, at least certainly incrementally. But the good thing is that specifically to your question, our operating leverage, basically our operating cost has come down relative to the size of the book, and our credit cost, as you mentioned, has come down. So all in all, despite a reduction in the net interest margin, the net profit has gone up, the return on equity has gone up, so it's trended in that direction.
When will we get the pleasure of interacting with you in your new avatar very soon, and how many quarters more before I would be able to ask you questions on the merged entity?
Okay, I think you should wait for maybe in December of 2018. September is a crucial month because IDFC Bank shareholders go for a vote on September 3rd for the merger. Later in September, Capital First shareholders will be going for a vote in all probability because that's how the dates are working out. So September is a crucial month. You can talk to me after that, and maybe in December certainly on the merged entity.
So till December it will be 7 days a week, 14 hours a day or 16 hours a day kind of a work schedule for you?
Yes, very much, because it's just a lot to work through in this system right now between, let me say, regulators, shareholders, running the company, business as usual, talking about figuring out strategies and integration. So yes, it's been very busy. I don't think this is going to go away even in December because a new life starts after then, and it's busyness all over again.
All right, Mr. Vaidyanathan, appreciate your time, and I look forward to meet you very soon once things are when things settle down as far as the proposed merger is concerned.
Okay, that's the stock reacting to its earnings, 2% higher almost for Capital First. The other one, which has been seeing a big relief,